All right, in this video, we're going to take a look at trading strategies, buying and selling cryptocurrency pretty much. So we'll mostly focus on when I buy and sell, and then we'll also talk about limit orders versus market orders, and then spot versus margin. I'll talk about how I separate trading and from holding, patterns, breakouts, Fibonacci levels, support and resistance, trend lines, and momentum pretty much. And these all have to do with when I buy and sell. So let's get into it and I'll show you what I'm talking about. Okay, so one thing that I want to talk about right before we start, just real quick, is market orders versus limit orders. I'll be talking about market orders and limit orders in this video, and I just wanted to clear it up what that was. So if we do a market order, we're basically either buying or selling exactly where the price is. Right now, the price is right here. If we want to do a market order sell, we would sell exactly right here. If we wanted to do a market order buy, we would sell or buy exactly right here. If we wanted to do a limit order, limit orders, you can set where you want to buy and sell. So let's say we want to sell up here at around 48,000. We could set a limit order at exactly 48,000 and it'll sell for us. We don't have to be there. Or if we wanted to buy at a lower level, let's say we wanted to buy down here at around 40,000, something like that, we could set a limit order right there. So if the price comes down, it'll fill that, and we don't have to be there to basically buy the order. So I just wanted to clear that up, make sure we all know what a market order versus a limit order is, because I'll be talking about those. Okay, let's get into some of the times that I like to buy. Okay, so usually when I put money into crypto, I will put in a certain amount and I'll put in some into trading and some into holding. And I have a Ledger Nano S and a Ledger Nano X, and so I usually just try to add to this little chart right here, and it'll just continue to go up as long as I keep adding to it. So what I'll do is take this amount over here, send it to the ledger, and then this amount over here, I'll try to do trading with it. So just to clear that up, so I guess the first way we could talk about is just dollar cost averaging. And that is, like I was talking about, is just adding into this long-term portfolio, just long term. Whenever I have a chance, I'll just put in a market order wherever we're at. I don't even really care or look at the price. I'll just put in a market order, buy the price where it's at, and then just send that straight to the ledger, and then don't even think about it, don't even worry about it. After a while, I'll be averaging out. What I like doing is just averaging out, dollar cost averaging, trying to buy as much of the price as possible, because in general, I believe in Bitcoin and I think we're going up, but that's just my opinion, not financial advice. That's just one way that I go about it, though. That's one way that I buy. I really like these Ledger hardware wallets, though. This is where I put my long-term dollar cost averaging position into, just throw crypto into here. I really like the way it separates it from my trading, and it also secures it and takes it off the exchanges, or mainly Coinbase. This is the one that I use, but any exchange in general, I'd rather have it on a hardware wallet where I have the keys and I am holding it. The one thing about having these is you are in charge of your keys and you are responsible for them. So if you lose your keys when you have a hardware wallet, you will lose your crypto. If you are on an exchange, you at least have an option to try to get back in there through the exchange like Coinbase. But it is like a trade-off. So in general, it's just who do you want to be responsible for your crypto. For me, I do like having the keys and I do like being responsible for it. Just in case something happened to Coinbase or something like that, I will have my crypto on my hardware wallet and it'll still be connected to the blockchain. I'll be set. I don't think anything's going to happen to Coinbase particularly, but I do like the idea of me just being my own bank, holding it onto my hardware wallet. Plus, I do like the app and being able to track it through the app. So yeah, just letting you guys know, if you guys are interested in getting one, I have a link in the description. Hook up the channel and it'll help it out. But let's get back into the next way that I like to buy. Okay, so I was talking about how I like to send some money to holding and some money to trading. And we're going to talk about the trading money now. Okay, so let's talk about another way that I like to buy, which is breakouts and patterns. I talk about these a lot on my channel. It's a lot of what I talk about on my channel. We look for resistance, 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 or resistance and support in general. We have support down here. We have resistance right there. We were watching this triangle pattern. We were watching on the 4-hour time frame. I like watching the 4-hour time frame and the daily time frame. So we're on the 4-hour right now. We got a breakout to the upside. What I like to do is target from the top to the bottom of these patterns. It just depends on the pattern. You have to kind of look at whatever pattern you're looking at. This one happens to be a triangle pattern, but I like buying on the breakout right here. So we could target from the top to the bottom of the triangle, drag that to the breakout, and we pretty much hit the target. Okay, so one way that you can go about this is you're watching this triangle pattern, something like this. You're waiting for a breakout to the upside or to the downside. We happen to get a breakout to the upside. So what we do is target from the top to the bottom of the triangle. We hit a market order right here. So we buy whatever price it gives us right there because we know the price is going to push up. What I used to do is try to put in a limit order down here. And for the limit order to hit, you have to hit it at a lower price. So the price has to go down a little bit. But if we're getting a big, huge pump, what you want to do is just hit that market order and just buy whatever price it's at and then let it shoot to the upside. Right now, we're still pushing up. What it's called is riding the momentum, and we're riding the trend. We're actually breaking the trend right here, and we're riding this momentum moving to the upside. Like I said, we're watching this support, and this support. It's basically giving us this uptrend, and we're bouncing on it every time we come into contact with it. So until we break it going to the downside, this is basically the new trend, and we can start kind of zooming out and starting to look at what other trends might give us trouble. If we zoom out and look at Bitcoin, we still have resistance right here and resistance right here. So we still want to be a little bit careful on the bigger time frame, and we're going to want to draw a trend line like this. Once we come up to this resistance level right here, we're going to want to see what happens. Are we going to start getting pushed to the downside, or are we going to break through and continue to push up? Once we start getting resistance, then we can start looking at selling. The other thing you can argue is that once we break this big downtrend, if we could break out of this big downtrend, that is also a buy signal, because we might be breaking this big trend right here, and this one might be starting a reversal. I think one of the levels that we'd have to watch is probably something resistance right there. We have resistance, something like that. So we'd probably want to look, if we could break through this one, then we'd be setting a higher high, because we're doing something like this on the chart. If we could break this little spot right here, if we could get a little bit above that, that'll pretty much be a higher high, or something like a reversal, something like that. I mean, we'll be getting something like that possibly. We'll have to wait and see, but the first thing is we'd have to break through that trend line right there. In general, if we break this trend line, every time we break trend lines, it's either a buy signal or usually a sell signal. Trend lines are not perfect at all, and sometimes I've gotten faked out a lot just by using trend lines, because I don't know, in general they don't work perfect. And by not perfect, not working all the time, I mean sometimes I'll take profits when it starts breaking an uptrend, but it'll get support immediately and it'll push straight back to the upside. And it'll kind of fake you out a little bit. You think it'll go lower, but it really gets support earlier and it just starts pushing back up. So I think that's a lot of the times where I get faked out with these trend lines. But sometimes at the same time, it'll be an early signal as to when we're starting to get bearish and we even break below some of the other ones. So it just depends. Sometimes it does work as a good signal, sometimes it doesn't. I do like using these trend lines though, because in my opinion, it does work pretty good. I think in general, you have to use all these indicators all together. So just using one is probably not going to work, but if you use a bunch together, then you'll have a better idea of what is happening. Let's talk about some of the times I like to sell or take profits, whatever you want to call it. So let's say that we bought right here, we made that nice little call. Now we're watching this uptrend going to the upside. So we're watching this trend line pushing us to the upside until we break it going to the downside. Then I'm assuming it's pushing us up. But once we break it, then I think that's a signal of weakness, and usually, not always, but sometimes it'll lead to a correction, and we can start either looking at previous bottoms, or we could do Fibonacci retracement levels. So that kind of brings us back to where to buy. So that's one way I like to sell, is when we break the trend line. So let's say we go on this trend line and we start breaking it to the downside. I'll take some profits right here. We bought right here, we'll sell right here, nice little bit of profits. That goes to the trading account. And also, the other thing I wanted to mention is when we break this trend line going to the downside, or a trend line in general, the way I will sell is I'll put in a market order to sell what I bought from the original trade. So yeah, instead of trying to do a limit order up here, I will do a market order, just get what I can get. The next thing is, if we break this trend line going to the downside, where is it going to stop? So that brings me back to what I was going to say. This is another time when I like to buy. So the spots that I also like to buy are previous support levels. We have support all the way down here. This one is sitting at around 40,825. So if we get rejected and start heading down, this might be a level that we might want to target. The other thing sometimes I like to do, let's say we come up all the way up here and we wick up right there and we start heading down. What I'll do is, we broke this trend line going to the downside, so I'll set up a Fibonacci retracement tool. You can grab it and you drag from the bottom of the trend to the top of the trend, and that'll give us levels that we can also buy. I like buying the 38% level and the 50% level. Sometimes I like doing this on a bigger chart. We're on the 4-hour time frame. I like doing this more probably on the daily time frame, just because then, or actually let's leave that there, because I don't know, in general I just like doing it on a bigger time frame. But what I like about doing these Fibonacci retracement levels is, especially with trading, is a lot of the times what you'll see is the price will bounce in between these levels. Let's kind of drag this out so I can get a little bit more drawing space. But what I usually see is, we'll break this trend line going to the downside, and then this red line will give us a little bit of support, and then we'll break down to the 38% level, bounce something like that. Or maybe we'll do something like this where we break immediately down to the 38% level, come back up, hit that red level, or hit the trend line, hit this top trend line, something like that, bounce down to the 50% level. We'll get volatility, is basically what I'm trying to say. And in between these two levels right here is usually pretty good, especially if you're looking at it on the daily time frame. Right now we're on the 4-hour time frame, so it's only like 1 or 2%. But if you look at it on the daily time frame, usually this is a good little thing to watch. It's also a good little way to dollar cost average. Like, let's say we don't know exactly where we're going to get a bounce at, and we come up and we break through. We don't know where it's going to stop. We don't know where it's going to get a bounce and start moving up. So these Fibonacci retracement levels give me levels to kind of space out my money. I really like the 38% level and the 50% level. I really hammer that on my channel. Sometimes the 61% level, or this, what is it, the 61% level? I think that's what it is. Yeah, sometimes the 61% level, it'll come down there too. But I usually like the 50 and the 38. And like I said, it's usually volatile, so it'll kind of come down, hit that 38% level, get a bounce up, then you can take profits once it starts swinging down again. Basically, it lets you take advantage of some of this volatility, and if you're buying at these levels right here, it'll bounce in between those and you can get some pretty nice little trades. Okay, so before we move on, I wanted to talk about the limit orders, or how I do limit orders for these Fibonacci retracement levels or these previous supports. So before, I was talking about we do market orders for basically when we're taking profits when we break the trend line. I'll do a market order right there. Or if we break the trend line right here going to the upside, I'll do a market order right there. But when we're heading down, I'll put limit orders. So I'll put a limit order at the 38% level, the 50% level, or maybe this bottom down here. It really just depends on where I think the price is going. But if I think we're going down, I'll put a limit order. And if we zoom out a little bit, that's where I have a position at from right here. So let's zoom out. I was using the daily time frame for this limit order. Let's go ahead and delete this Fibonacci retracement level. We'll delete that. The main thing I was watching is we were trending down since up here. So what I was doing is watching this previous support down here. This was sitting at 40,000. I put in a limit order at 41,000 because we had a little channel pattern, something like this, and the target went to 41.5k. We pretty much hit that target, then we started bouncing to the upside. So using this previous support worked out pretty much perfectly. If you would have done to the wick, you would have probably even got that done, because we wicked down all the way down to 39,600, which is pretty much where we wicked down right here. We wicked down to around 39,700. So you would have got that filled if you would have used the wick. I just wasn't sure. Sometimes we don't go all the way down to the wick, or even down to all the way down to the body. But we did get a nice little bounce right here, and that's where I had my limit order set at 41.5k because of this previous support. And like I said, I used a limit order, so once the price came down, it automatically got filled. I wasn't even there when it actually got bought, and now I have that position, and now we're moving to the upside. Okay, so let's talk a little bit more about selling. We have this triangle pattern right here. We got a breakout to the upside, and like I said, we were targeting from the top to the bottom of this triangle pattern. We were dragging this to the breakout, and we had a target of 44,100 approximately. This is another spot that we could potentially sell at. We could put a limit order right here. I don't really like doing that because then you could potentially be missing out on if it pushes more to the upside. So I do like watching these trend lines, but these targets are good to kind of reevaluate what's going on when we start to hit them. Right now, it looks like we're getting a little bit of weakness, it seems like, and the volume is starting to come down a little bit. I think that's another thing we can look for when we want to sell. Is the volume starting to decline while the price is going up? If we go to the RSI, it doesn't look like we're having a huge bearish divergence, not that I can tell. It does look like the RSI is trending up while the price is trending up. This is another thing you want to look for. If the volume is starting to decline and the price is trending up, check the RSI. If the RSI is trending down as well, then that's a bearish divergence. Right now it's trending up, so that does look pretty good. It's trending up, so it does look good. If it was trending down, it would look like a bearish divergence. And that's one way that you can kind of get a clue, is if the volume's trending down and the price is trending up. That's pretty much weakness because there's less people buying it while it's going up. And in general, it's just usually a sign that it might be starting to get it might get a correction pretty soon. Right now, I'm not sure. I'm still watching this trend line, so we'll have to wait and see for this. But yeah, that's another way we can kind of get a signal. That's a way that some people like to sell, is right at the target price. Let's talk about spot versus margin real quick, and this kind of ties in together with what I was just talking about. So if you're doing spot, then you're basically buying Bitcoin right here and you're holding it, and if you're holding it up here, then you could sell it up here and you made a profit. But with leverage, you're basically borrowing a certain amount of Bitcoin or whatever you're trading, and then you're borrowing it until we get up here, and then you can sell it and make more money. And you use less money, you borrow more coins than you putting money into. So basically what I'm trying to say is, if you're doing leverage, these targets right here are pretty good to take your profits on, because you really just kind of want to be in and out when you're doing leverage. So when you're doing leverage, you watch this triangle pattern right here, hit that market order right there, watch it go up, hit that target, something like that, take profits, and then kind of wait for another pattern or wait for something else to happen. Because you're doing leverage, you really want to be in and out. You're basically borrowing money. The longer you're in there, the less profit you're going to have, because they're going to be the clock will be ticking and you'll be basically having to pay a little bit of interest. In general, for me, I really like to stick to spot trading, and I really only try to play with leverage if I feel like gambling or something like that, and I just really want to play with it. And if you're a beginner, I really would probably advise to probably just stick to spot trading and just buying crypto just like that, instead of you trying to get leverage, because in my opinion it's just pretty hard. So what I usually do, instead of exactly just selling at the target, is I'll usually wait for the momentum to turn around. Right now our momentum is going to the upside. If I start seeing that we get rejected right here and the momentum starts turning down, that'll be a signal that I could take profits and either set up those Fibonacci retracement levels and try to see what levels we can get, or start to look at these bottoms again. It just depends on what I think at the time, but that's one way that you can go about it. I'm kind of curious in general if we're going to be able to break out of this downtrend right here. So I'm just kind of waiting to see what happens right there. If we get rejected somewhere up here and start trending down, once we break this trend line going to the downside, I'll probably start looking at these previous support levels, maybe something like that. I do like to wait till the momentum does start to shift to the downside and we do start to see red candles, as opposed to just hitting the target though. So one of my other strategies is I never sell at a loss, or I keep my positions separate. So like I said, I have a position I bought at 41.5k. I think it's somewhere right here. This position has nothing to do with any other position. This one is all by itself. So if the price starts going below this, then that position is pretty much stuck. And right now it's not stuck. I am in profits for it, so I am eligible to take some profits wherever we are right now until we come back down to right here. But in general, this position has nothing to do with this position up here, the positions that I have up here or the ones that I have up here. Basically, I don't sell these ones if it gets stuck. If the price goes below the position, I won't sell it. I'll just look for a new spot to try to set up another trade. In general, that's why I only like trading and investing on what I really believe in long term. I don't mind accumulating Bitcoin, so I accumulated some up here. In reality, I was trading it and it got stuck, but I don't mind just accumulating it. Actually, what happened is I actually sent some of these positions over to BlockFi, and now I'm earning interest on it. So I'm still earning interest on some of these positions up here, even though they're kind of stuck and they're worth less money than when I bought them. But I am bullish on crypto in general and on Bitcoin. So I'm just thinking, as long as I just keep on dollar cost averaging, trading, trying to make some profits in these little trades and dollar cost average, trying to accumulate, then I think that's a good thing in general. But like I said, I won't sell at a loss. So if I buy up here and it starts going down, then I will just hold this position until it comes back up and I can start trading with it again. Okay, so here's another thing that kind of ties into what I was just talking about. So here's an Excel spreadsheet of how I keep track of my orders and basically my trading. So this one is for the Sol coin or Sol token. And what I do basically is I'll put the date in this field right here, and then I'll put the amount that I bought right here, and then I'll put the price that it was and how much I paid for it right here. Then when I sell it, I'll move these things over here and I'll put how much I bought or how much I sold it for in this column right here. Then what I could do is add this number and this number together, and it gives me my profits in this little area right here. Then what I could do is add up this whole column right here, and it gives me this number right here. So I was trading this right here. I made $3 and 29 cents. I was just playing around with it. I was buying $5 at a time, but I kind of came up a little bit, $3 for just playing around with $5 at a time. So yeah, I mean, this is one way that I kind of keep track of my trades. This way, one trade is kept track of and another trade is kept track of separately, basically. And I could keep track of how much profits I get and where and when I bought how much crypto for how much money and all that. It's basically nice to keep track of all this stuff in the long run, in my opinion. And also, this is Sol, the Phantasma coin, not Sol Solana, just to clear that up real quick. Also, I wanted to tell you that I use Microsoft Excel. This is Office 365. This is free. All you have to do is go to Office 365, sign up for a free account, and you can use Microsoft Excel. I hope you guys know about that. It's a really awesome tool. Not sponsored or anything. I just use it and it's free and it's really cool. So if you're not using Outlook or Office 365 in general, you should go to Office 365, sign up for a free account, and then you can use at least Excel and the other programs that they have. You can basically use it all through the web. I'm just using this on a web page and it all saves automatically. Office 365 is awesome. Hopefully you guys use it. Just wanted to throw that out there. Okay, so that pretty much wraps it up for some of these trading strategies on buying and selling, some of my thought processes on when I buy and when I sell, and kind of just someone asked me a question, so I wanted to clear that up. Just wanted to kind of make a video addressing that specifically, when I buy and when I sell. If you guys like this video, hit that thumbs up button. This video is going to be part of a learning playlist, so there should be another video popping up right here that you could probably learn more stuff on. If there's not one there right now, there should be one in the future. If you guys want to support the channel, check out my Patreon. You can donate Dogecoin in the wallet address below. I'll see you guys in the next one. Thanks for watching.